Imagine waking up one day and seeing the price of silver suddenly rise to $200 an ounce. You check your bank balance, and you're in shock. The money you've saved, the wealth you've built, has just lost or gained value in an instant. At first, it might sound like a dream. But what if it's a trap? One that's been set for years without most people even noticing. Many might think that silver is just another metal used for jewelry or electronics. But silver is also a critical player in the world of finance. Over the years, its value has been closely tied to big financial institutions, banks, and even governments. While most people are only aware of gold as a precious asset, silver is quietly becoming just as important. What's even more interesting is that there are signs that something unusual is happening in the silver market right now. For anyone who has been paying attention, the situation feels eerily familiar. Why? Because we might be watching the financial world repeat the same mistakes made decades ago. This time, however, the players are different. It's not just two wealthy brothers from Texas trying to control the silver market like they did back in the 1980s. Today, it's banks and global institutions working behind the scenes, and they're doing it on a much larger scale. Back in the 1980s, two brothers, Nelson and William Hunt, tried to corner the silver market. They bought up massive amounts of silver, driving prices up in a way no one had seen before. It was a bold move. The brothers believed they could control the silver market and make a fortune. But when the U.S. government caught wind of their plans, it quickly stepped in to stop them. The result was a financial disaster, with silver prices crashing almost overnight. Many people lost millions. The Hunt brothers' actions left an unforgettable mark on financial history. Now, let's fast forward to today. The Hunt brothers may be gone, but the playbook they used is still relevant. In fact, some experts believe that the same play is being run right now. Only this time, it's bigger and more secretive. You might not hear about it on the news, but the banks and big investors are quietly accumulating silver. It's not something they're making obvious. They're doing it behind the scenes, controlling the supply and manipulating the market in ways that are hard for the average person to notice. It's almost like a game of hide and seek. The people who are playing this game, the banks and financial institutions, have learned from the past. They're not going to make the same mistakes the Hunt brothers did. They're careful, calculating, and they're making sure the public doesn't catch on until it's too late. And by the time people realize what's happening, it could be too late to do anything about it. So what's really happening? Why are these institutions quietly building up their silver reserves? The reason might be simple. Silver is in high demand. With the world moving toward green energy, silver is needed for solar panels, electric cars, and batteries. But it's not just about the demand for industrial use. It's also about the economic instability around the world. Many investors are looking for safe havens, and precious metals like silver are seen as a hedge against inflation or financial crises. But here's where it gets tricky. If the price of silver were to suddenly skyrocket, the banks and large investors who have been hoarding it would stand to gain massively. Meanwhile, the average investor, who hasn't been paying attention, could be caught off guard. They would see silver prices go up, but they'd have missed the chance to get in early. This, in essence, is the hidden trap. It's not about a sudden crash or disaster, but rather a carefully timed move that could make certain players rich while leaving others in the dust. Silver's price could soar, and banks and large investors are positioning themselves to profit. The question is, are you aware of what's happening behind the curtain? The truth is, the silver trap has already been set. The question now is whether anyone will notice it before it's too late. And as this story unfolds, it's up to the viewers, people like you, to decide whether they will be caught in the trap or stay ahead of the game. This is just the beginning. It was the 1980s, and the world was watching as two brothers, Nelson and William Hunt, made a bold and risky bet on silver. They didn't just buy a few ounces or invest in silver mines. No, they set their sights on controlling the entire market, amassing huge amounts of silver, with a vision to turn it into an empire. It was a financial strategy that would send shockwaves through the economy and leave a lasting impact on how markets are watched today. But why would two wealthy men risk everything to manipulate the price of silver? Back then, silver wasn't just a precious metal used in coins or jewelry. It was a commodity, highly valuable, and with the right control, it could be a source of immense power. The Hunt brothers, known for their wealth and ambition, saw a chance to corner the market. They began buying silver on a scale that had never been seen before. Their goal? to accumulate enough silver to control its price globally. By doing so, they believed they could become even wealthier while also exerting power over the global economy. At the time, silver was trading at about $6 per ounce, but the Hunt brothers drove the price up with their relentless buying. Within a year, silver's price skyrocketed to over $50 an ounce, an increase of more than 700%. People couldn't believe their eyes. Everyone from small-time investors to large financial institutions started to take notice. The Hunts seemed to have cracked the code on wealth and market manipulation. But what started as a high-stakes game of finance quickly turned into a financial nightmare. As silver prices climbed, banks, the U.S. government, and other major players began to notice that the Hunts were controlling the market too much. There was a serious risk that silver, and by extension the financial markets, could spiral out of control. As tensions rose, the U.S. government stepped in. In January 1980, the government imposed regulations limiting the amount of silver the brothers could own. It was a dramatic move that stopped the Hunts in their tracks. The result? The price of silver collapsed almost overnight. By March of the same year, silver prices had plummeted from over $50 to around $10 an ounce. Investors who had bought silver in hopes of making a profit were left devastated. The Hunt brothers were forced into bankruptcy, and their reputation as financial manipulators was cemented in history. The silver market had been destabilized, leaving many to wonder how something like this could happen. But here's where it gets interesting. Despite the failure of the Hunt brothers, their actions sparked something in the financial world. The events of 1980 didn't just cause a collapse. They opened eyes to the immense power that precious metals, like silver, could hold. The idea of cornering a market and controlling its price didn't just vanish after the Hunt's fall. In fact, it became a blueprint, a financial playbook that would be studied by many in the decades that followed. Today, we're witnessing a similar game being played, but this time, it's not just two brothers. The players are much bigger, and the stakes are much higher. Silver is no longer just a commodity, it's a battleground for financial giants. And as we look at the world today, it's hard to ignore the growing whispers of history repeating itself. You see, the Hunt brothers may have failed, but their playbook is alive and well. The idea of accumulating silver to control the market, to influence prices and create financial chaos, is something that's still being practiced, but this time it's behind closed doors, in the hands of global banks and institutions. Imagine you're walking through a busy financial market, and everything seems stable. You hear analysts talking about stocks, bonds, and maybe even gold, but something crucial is missing from the conversation: silver. Despite being one of the most valuable and sought-after metals in the world, silver often flies under the radar of most investors. But here's the catch. While everyone's eyes are on other assets, the world's largest financial players are quietly making moves in the silver market. So, what's going on behind the scenes? Well, just like in the 1980s, silver is once again becoming a hot commodity, but this time, it's not just a couple of individuals. Today, banks, financial institutions, and even governments are involved in the silver game, and they're taking steps that could make the events of the Hunt brothers' silver crisis seem small in comparison. Here's where it gets interesting. Silver is not just being traded for jewelry or industrial use. It's also a key player in the world of renewable energy. You may have heard a lot about solar panels, electric cars, and batteries. Well, silver plays a major role in all of them. Solar panels, in particular, rely on silver because of its ability to conduct electricity. As the world shifts towards more sustainable energy solutions, the demand for silver is skyrocketing. In fact, some experts predict that silver demand for renewable energy technologies will increase dramatically over the next few decades. But here's the kicker. Banks are aware of this growing demand, and they're starting to position themselves for what could be a major silver rush. It's not just about supply and demand anymore. It's about controlling the flow of silver before the public even realizes how valuable it is. Banks are quietly hoarding silver, building up massive stockpiles, while simultaneously influencing the market in ways that are difficult for the average investor to track. You might wonder, why are they doing this? What's the big secret? The truth is, banks have been using precious metals, including silver, as a way to protect themselves from financial instability. With the world's economy facing challenges like inflation, rising debt, and political uncertainty, more investors are turning to safe haven assets. assets like silver, which historically have performed well during times of crisis. But here's the problem. Just like the Hunt brothers did in the 1980s, financial institutions are building up these reserves with a specific goal in mind. By controlling the supply of silver, they can influence its price. As the demand for silver continues to grow and the supply remains tight, the price of silver could skyrocket in the coming years. And when it does, guess who will be holding the lion's share of the silver supply? That's right, the banks. They will be sitting pretty, while everyone else scrambles to get their hands on what little silver is left. Now, let's think about the implications of this for the average investor. Many people are still unaware of how big a role silver plays in today's economy. They're not paying attention to the supply issues or the growing demand from industries like renewable energy. By the time they realize what's happening, it might be too late to get involved in silver at a reasonable price. Just like the Hunt brothers' silver trap, the game might be rigged before the public even knows it. The financial institutions are making their moves quietly, but they are positioning themselves to benefit massively from the coming silver boom. They know that as silver becomes more essential for technology and green energy, the price will inevitably rise. And when that happens, those who have invested in silver now will see huge returns, while those who wait until the price has already climbed may miss the opportunity. But there's one more twist to this story. If the price of silver rises too quickly, it could trigger another financial crisis. Just like in 1980, a rapid price increase could cause panic in the markets. Banks could face huge losses if the silver market becomes too volatile, and governments might have to step in once again to regulate the market. The question is, how much longer can this silver game go on before it spirals out of control? As silver's role in the global economy grows, the bank's strategy of quietly accumulating silver is becoming more apparent. They're not just playing the market, they're controlling it, setting up a silver trap that could have massive implications for everyone involved. And if history teaches us anything, it's that when big players control the market, the consequences for the little guy can be catastrophic. So, what does this mean for you, the viewer? Are you prepared to navigate the silver market, or will you be caught off guard as banks and financial institutions quietly reshape the future of silver? You're holding a small piece of silver in your hand, thinking it's just another precious metal. But what if I told you that this simple metal could soon become the key to one of the most significant financial events of the decade? The silver trap is being set right now, and unless you're paying attention, you might be left wondering what happened when the market changes overnight. You see, while the world focuses on stock markets, tech companies, and even the price of gold, silver is quietly playing a crucial role in the global financial system. It's not just about its use in jewelry or electronics anymore. Silver is at the heart of some of the world's most important industries: solar energy, electric vehicles, and even digital technology. The demand for silver is increasing at a rapid pace, and here's the catch. The supply is far from meeting this demand. But here's the real trap. Banks, global financial institutions, and even governments are quietly accumulating silver. They're not doing it in the public eye. Instead, they're building huge stockpiles in secret, while the rest of the world remains unaware. These institutions are positioning themselves for a silver boom that could send the price of silver soaring, leaving many regular investors out in the cold. So why aren't people talking about it? Why is silver being kept under the radar? The truth is, the price of silver could be manipulated, much like it was in the 1980s. Banks know that controlling the supply can drive the price higher. They're betting that the world's growing demand for silver, combined with its limited supply, will force the price to surge. And when that happens, the financial institutions holding the largest amounts of silver will be the ones to reap the rewards. But here's the kicker. When silver prices do shoot up, it won't just be a windfall for those in the know. It could cause serious ripple effects across the global economy. The last time this happened in 1980, we saw an unstable market crash when the Hunt brothers' attempt to control silver prices came undone. Imagine if this happens again, but this time with much bigger players and on a global scale. What would that mean for your savings, your investments, and your future? In the coming months and years, the silver market could face a tipping point. Banks and financial institutions are ready to make their move. They're prepared for silver to reach astronomical prices, perhaps even $200 an ounce or more. But for the average person, that's where the trap lies. By the time silver reaches these inflated prices, it could be too late to profit. The early investors who saw the signs and acted now will be the ones to benefit. Meanwhile, those who wait too long will be left with nothing but the aftermath of a market that's already been manipulated. The question is, are you prepared for what's coming? Do you know how to protect your wealth in a market that's being carefully engineered for massive financial gains by a select few? The silver trap is real, and while it may sound like something out of a financial thriller, the reality is that it's happening right now. The next few years could change everything you thought you knew about money, investing, and market manipulation. It's not just about silver. It's about understanding the financial forces shaping our world today. You might not have control over the banks or global institutions, but you can control how you react to these changes. You can learn how to protect your assets, how to recognize the signs of market manipulation, and how to avoid falling into the trap that's being set right before our eyes. So what do you do now? Start paying attention to silver. Watch the supply and demand. Keep an eye on what banks and major investors are doing behind the scenes. By the time silver hits $200 an ounce, it could be too late for most people to get in on the action. But if you act now, you might just find a way to come out on top. The silver trap is set. The question is, will you fall into it, or will you be one of the few who sees the signs and positions yourself for the opportunity ahead? Stay informed, stay vigilant, and stay ahead of the curve. Because when the silver rush happens, it's going to be one wild ride.